TFNN.
And good evening, folks. This is Dave White sitting in for the one and only Tom O'Brien. Of course, we'll have Andy Heck in here in 20 minutes. So we'll talk about commodities probably for 20 minutes after that, maybe a couple of segments. Anyway, if you're just getting out of your cars or climbing out of a cave, whatever you might be, the S&P closed down 2 points after being down about 12, got to 2267 for the low today, closed at 2278. Volume really did pick up today. So you would like to have seen that push down to a lower low on lighter volume. Right now, 4.36 billion shares on the New York Consolidated Tape. I was saying on my show at 2 o'clock today, tomorrow will be a big signal. And that signal will be after the FOMC meeting. That is at 2 p.m. tomorrow Eastern time. And there won't be any discussions after it. So there'll just be a announcement and some text, and everybody will fight over the meaning of that text. And by the end of the day, I think we're probably going to have some kind of signal. As I told everybody, I suspect that we're pulling back to 2240 on the S&P cash, but that is not going to be in a straight line. If you are looking for a signal to short the market, as many people are, what you really like to see is that move to the top, where we only had about 3.8 billion shares above 2,300 on the S&P cash. You'd like to see now, if you're bearish, a move higher with lighter volume over the next day or two. If you're bullish, you'd love to see the volume that we have today, somewhere about 4.3. To signal a new high and continuing highs, I would have liked to seen somewhere around 5 billion shares compared to the 3.8 billion shares that we had at that high just over 2,300 on the S&P cash. So do we have to get all the way there if you want to become bearish? The answer is no. Do we have to do a lot of other things? No. Now, if you want to be bullish, apparently that turning off your phone, even with an emergency alert, does not matter. I just found that out. So what else do we have? Anyway, 2278 as the closeout here. We have a lot of earnings after the bell. And as always, we like to start our show off with a little bit of history. So why don't we do that even on time, Joe?
Then it's all just a little bit of history repeating.
On this day in 1950, President Harry Truman publicly announces his decision to support the development of the hydrogen bomb, a weapon theorized by hundreds of times more powerful than the atomic bombs dropped in Japan during World War II. Part of that decision was that, of course, the Soviet Union had already started developing that and more. Interestingly enough, we were really starting to get very warm in the Cold War. Mostly because, in fact, a lot of people don't know it, that during the Second World War, we had a bunch of B-29s, I think 3 of them, that landed in I can't even say it, in Russia, Vladivostok. And the Russians had taken them apart. And, of course, they, up to that point, had no way to actually deliver an atomic bomb unless it was in the back of a truck. So we started to see the development of them building that airplane. And, of course, in 1947, they detonated their own atomic bomb. So we were looking for a little bit more. There was kind of a food fight between most of the scientists. Edward Teller, who is thought of as the father of the hydrogen bomb, was really the main proponent of it because he figured out that you could do it. You needed an atomic bomb to set off a hydrogen bomb, which was kind of interesting. And they worked on it for a little while, and of course, in a number of years, set one off. What they didn't know was there was a mole, a spy, who fed every bit of information that was going on in the nuclear development to the Soviet Union, and they had one not long after we had ours. They just got it on the cheap. Anyway, on this day in 1950, the Cold War turned a little bit hotter as the cat and mouse game continued. We talked, as we said at the very beginning of the show, that we were down, what is that? Down 12 points on the S&P cash. Volume was pretty big. A little bit of divergence in the broader indexes when we look at the Dow. It was off 107 points, and everybody goes, "Well, it was off 100 points." Well, if you look historically, a 10-point move in the S&P cash is not that big a deal. Being down 2 points, though, why the Dow is down 100 points is that much. You would say that if we're down 2 points on the S&P, you probably should be down 4 or 5 points on the NASDAQ, and you should be down, of course, about 20 points on the Dow, so significantly lower there. A lot of people kind of scratching their heads and figuring out why. I think I have a reason, and again, it goes back to FOMC. This has been kind of ruminating since Friday, and that is many people, after the GDP numbers, figured that maybe those numbers were cooked for the election cycle. Politicians fudging the books. Never happened. Never happened, right? So anyway, a lot of people are thinking that those GDP numbers were just fudged for the election. They were right back down to the 1.6% level that we've been on for forever. And that means that of the 3 projected rate hikes that they're looking at this year, quarter point, the FOMC may tomorrow actually drop one of those. That caused gold to pop a bit, caused the dollar index to drop below the psychological 100-point number. So now we're in a position where, guess what? We have a huge day coming in the market tomorrow. That is, if anything means that we close lower, if gold reverses, if the dollar reverses, we're going to have some very big signals in the market. We'll talk about this, and then when we come back, of course, we'll have Andy Heck at that time. So it'll be a great time for all after this short time out.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex.